All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday. What is today? Lucky 7, May 7th. So a little bit later than normal video. I had to do a webinar for somebody right after the close today, and was running around for something else earlier today too. So busy day with the market. But let's go over some of the price action today. Obviously a little bit different than yesterday, where buyers came in pretty early and came in with a vengeance at the end of the day yesterday. Today was different, right? Had a different feel to it. Futures started to go lower. Not only were we moving on, well, I guess probably headlines from this too as well. But the EU came out and said that they anticipate slower growth for Germany. And Germany is one of the biggest economies out there. So that also weighed on markets, and we started to go lower in the beginning of the day. On top of, and sometimes when you get several things going on, sometimes the market can weather the storm when it's one particular thing, not isolating any one thing here, but when you have a couple of them that go on, you talk about slower growth in Europe. Then of course the tariffs that are going to be enacted on Friday, so the trade war escalating, and then I think the trifecta, the third thing was, we're sending moving ships over to the Middle East because of some Iran movement going on. So the market has its hands full, and this is, typically what happens when there's bad news on the tape is the market's going to react to it. We've had a really nice run over the last few months, and most of the headlines, it's been pretty headline free. Most of the headlines that we've gotten is that there's been trade progress, right? So that's moved the market. We've also had, I think, some pretty good earnings results, or better than expected from probably expectations that were too low. So we've made this really nice move. Now, so is this the I mean, so I think it's always a little bit dramatic when you have a day where we definitely finished off the close. We were down 2% in S&P. IWM finished down 2%. The Q's also right there with the small cap. So when you have days like this, first of all, there's never any easy dips to buy. Whenever, a lot of times people will say, oh, I can't wait till I get a dip where I can add more risk. And whenever the dip happens, it doesn't matter what case or what situation it is, it's always a difficult day to figure out what you're going to do. We talked about this in yesterday's video, a couple concepts, right? About number one, I thought yesterday was a blessing in the fact that the markets rallied like they did, and it allowed you to possibly get outside of some risk. Also, these days I think are also very good for learning wise. I saw this on Twitter. Whenever I see something that's really, when I see bad information, I never want to put anybody down on Twitter. That's not my thing to do. But when I see that there's just a ton of bad information out there, and making things worse off than they are, I will absolutely step in when I see that there's a lot of bad things. But you got to understand, like, this is how the market works, right? The market, goes up and it goes down, and you have to have a little bit of a game plan, and of course honoring stops is a big part of it too, but you have to be able to kind of roll with the punches a little bit and not talk about, I don't like chaos if the market goes down a little bit. I mean, that's just part of trading. And so today was a bad day for me. I mean, I was down money today, but in the grand scheme of things, it's one day is not the end of the world. You have to kind of look, yeah, you kind of have to back up a little bit and realize, first of all, anybody who's been bearish the last couple months should not be doing a victory lap today, because we're still much higher than levels that we've been, for most of the year. So it's just part of the game to see volatility, come in from time to time with the VIX. Again, and I said this in yesterday's video, the VIX, the average of the VIX historically, because I see people going nuts about talking about the VIX today. The average of the VIX over time is, around, and I'm ballparking this a little bit, so don't come at me, but the average of the VIX is about a 17, 18 around there. So when we're floating around a 12 in the VIX or 13, and we spent some time there in the VIX for a while, but that's not average, right? So when we shoot back up to 20, which is more in line with historical levels, please, try to, and it's a big move. It's a big 2 day move in the VIX. But just realize, in the grander scheme of things, this happens from time to time. We do get bouts of volatility, and I'm just this time I'm just completely making up numbers. But the majority of the times that it happens, they're good buying opportunities. Now, moving forward, they're not always a good buying opportunity on day one. Sometimes it's day two or day three. So you kind of have to think about that. What some of the things that we went over in the trading room, and I try my best to kind of help. And I'm always very glued to what the VIX is doing, what small caps are doing, what oil is doing on days like this, what copper is doing. What else? I'm looking not only at the VIX, but I'm looking at the VVIX, which I'll bring up that chart as well. I'm looking at the VXN, which is so the VVIX, by the way, is the volatility for the VIX itself. I'll bring up that chart in just a second. Also VXN and RVX, which is, again, remember the VIX is just the volatility for the S&P, and it's a short-term measure. The VXN is for the Qs, the RVX is for IWM. So, if you're trading those, more of the Qs and IWM, those are also interesting to look at. But I'm looking for some type of I put this out on Twitter earlier. I'm looking for some type of divergence. I also look at the yen. I look at the gold a little bit, as well as the dollar. Bonds is a big thing as well. But these are all things. And then I look for basically a divergence, right? I look for something like we got that yesterday, which was really nice. When things were going down, copper started to go up, right? Which is very unusual when something, especially copper, is correlated to emerging markets. So when copper started to go up yesterday, it kind of seemed like things weren't as bad as what was going on the lows in equities yesterday. So today we really didn't get many divergences where something started to act more risk on than, meanwhile, the majority of things were acting risk off today. So we really didn't get that until the end of the day. I don't know if this last 10 minutes of the day where we rallied pretty hard is something to kind of hang your hat on. But just like I said yesterday, I didn't think that rally yesterday was something to hang your hat on either. I think right now you have to go one day at a time. This meeting with China is going to be, it's not going away. They're coming here on Thursday and Friday. Whether they raise tariffs on Friday, that's not going away either. So I think you just have to take a step back and look at the overall picture, and think about whether you want to be adding risk here and what degree of risk. Also, with options, what maturity? We talked. I did, for example, I bought a little bit of Microsoft today, and again, I'll go over all these charts, but I just wanted to talk generally for a minute. But and I'm giving it time. I'm not going into weeklies. I think if you're going into weekly options, you must have a pretty high conviction about the market, how the market is going to change, right? And the other thing is, you don't want to be, in my opinion, you don't want to be trading in the rearview mirror, like looking at your P&L and saying, "Oh, I'm down today. I got to get it back to flat. I got to get back to positive." I think you want to be looking out a little bit further than, we're all going to have bad days with P&L. The main thing that, and if you've been a trader for a while, that you're playing the long game, right? It's a marathon. It's not a sprint. So, weekly options, I don't think right now, unless you really have high conviction that there's going to be a turn in the market and you want to play something really quickly, is something to use. I gave a whole big couple minutes on that yesterday, and I've done that in several other videos talking about, just the bad things about weekly options. They're big loss makers when something like this happens in the market where you get a correction, right? I think people, again, traders get complacent. I do too, when everything just grinds up, right? Weekly options work every day, but that's not really how the market functions on average. So, all right, so that's a pretty decent, rant on what's going on. But this pattern of a little bit of market volatility, it repeats itself over and over and over. The more that you get acquainted with this is normal, then the more that it can kind of help you deal with it. But going into panic on Twitter and ranting about that this is extreme and this is look at the VIX, it's straight up like a rocket. In my opinion, and again, you have to learn somewhere, but that is really some inexperienced traders that are talking. So my point is here, don't, if you're on Twitter, and I'm on Twitter, obviously, if you're listening to these guys, please ignore that kind of thing. And just because someone has a lot of followers on Twitter or speaks very confidently, it doesn't mean they know anything. All right, so that's that's why I wanted to go. I'm always trying to help when I see things put out so incorrectly and so badly that I need to actually make sure that you're aware that that's not the only view, and that's really not how markets. Again, I've gone back and from my experience, I've traded through the financial crisis, through 2007 to 2009, dealing with really high levels of volatility. Obviously December was that too, a very high level of volatility. But these things give you experience, and if you've experienced some of them, it really kind of helps you go to battle whenever we have days like where everything's going down for a little bit like it was today. Okay, so since I have the VIX chart up, yeah, it did not close on the highs. You could go and you can kind of look on previous bouts of volatility. Notice we had a little bit one. We had a small one in March. We had a small one at the end of March, and we turned back down. I think we got above the 50-day moving average in the VIX. Here briefly. So this looks like a little bit more formidable. But you could go span back, and usually it's usually a couple days is generally the case. We had a bigger one here in October, which lasted for a little while, and volatility stayed elevated around 20 until we had the big move higher. So a couple other things to watch, and then I'll talk about whether or not I think we're going to have a bigger sell-off or not. Or basically levels to watch. But the VVIX is also something to watch. Again, that's the volatility of the VIX. Keep an eye on that. That really, is also a good indication of whether or not things are starting to kind of mellow out, or if they're still under pressure, volatility is still there. Right now, I don't think you can really make much confirmation. Finished a little bit off the highs, but not much. So I think that you need a little bit more patience. Going into the S&P, there is something, and we're giving a webinar tomorrow on value areas for members, but there is something that's called the 80% rule if you're using value areas. Once you enter the value area, and once you're firmly inside, there's an 80% chance that you go all the way through it. We did that today, right? So we did not close there in the S&P futures. Still, and what I said earlier today is that we do have some decent support, and you could see that we bounced pretty nicely from there. So again, one day is not a trend. We don't know how this is going to work tomorrow, but if we start to break the 50-day moving average, something that we really haven't tested at all in 2019, right? We've been in this uptrend. We crossed over the 50, and then since then, by the way, I'm sorry, the 50-day moving average is this purple line that is going up here. But we really haven't had any major tests of the 50. So this is the first time that in 2019, since we crossed it, that we're testing that. And I think that's a great place to kind of watch in the next couple days whether or not that holds, right? So that's S&P. Again, very easy. And if you lose that, then you could really start to dial down your risk. And maybe put on a few more hedges too, which I know will kind of be after the fact, but that's what I'm watching. The Qs are still way above, are still in value as well. IWM, which closed down 2%. It's been back and forth like this now for a couple months in IWM. So, it just gives a lot of head fakes, IWM. But again, all in all, not the end of the world. It is holding the 20-day moving average. Really, I would watch this bottom of value 155.13. If we start to look at some names, I'll go right to Microsoft. We saw, by the way, for option activity. Let me give my 1 minute speech on that. We saw a ton of call activity, right? A lot of the momentum, smaller stuff, a ton of it yesterday. Keep in mind, it's not going to really tell you, if you followed some of that option activity yesterday, it really did not give you much of a hint that there was going to be volatility. It's just how it works. Most of 90%, and I'm using a lot of percent terms, but maybe a little bit less. Maybe 80% of option activity, like on the call side, is momentum based. It's especially the smaller stuff, like going either weekly options that we see hit the tape or monthly options. It's momentum. They're just playing. They're just following the trend. They're just following the momentum, right? And a lot of it is algo based. It's not guys who are making great decisions. And I argue with this, because I do look at option activity. I do think it's useful for some reasons, but it's not going to give you a heads up when there's a turn in the market. I know some people will try to really cherry pick orders and say, "Oh, this was the put order. That this was so revealing." I don't think so. I just don't think. Sure, somebody I'm sure bought puts yesterday who was pretty smart. But again, I always go back to, right, who are the people who are using option flow, who are using options? Most of the time, it's hedge funds. Are hedge funds killing the S&P? No. So you have to. There's this disconnect always with option flow. Is that the guys the guys and girls who are trading it are hedge funds, and hedge funds are not out. If option flow is so great, why are hedge funds not outperforming the market by 30%? So again, people cherry pick these orders all day long, but all those calls that went up yesterday all got smacked, right? So again, just being realistic. Again, I'm not trying to say that anybody's system is wrong or anything like that, but just be realistic about how you're seeing this. Now today, everybody was buying puts. So I could show you order flow and order flow and order flow of everybody buying puts today, all after the fact. And a lot of VIX order flow too, which I have to go back and check open interest. There's a lot of order flow in VIX calls, but a lot of it was against open interest. So I don't know if they're taking profits on the move in VIX or if they're doubling down. I have to go through open interest tomorrow, and I'll share that in the trading room tomorrow. But I think that was kind of one of the most interesting things with flow today. But for the I would say first 4 hours, where are all those call buyers from yesterday? Completely absent. They crawled back into their shell the first 4 hours of this session. There was a tiny bit of call buying. Everything that we saw, except for one 3M order, which is not my cup of tea. Somebody buying like 12, appears to be buying 12,000 contracts, way far out of the money, by the way. So, we'll see if that order works out. I know, 3M is pretty oversold, so I wouldn't be surprised if it bounced a little bit. But I think they were buying, 200 strike calls? So, again, like I said, really far out of the money. 3M orders, and you don't know what they're doing on the other side of it. All right, so again, I'm just trying to give some perspective with the option flow and with people on Twitter. You have to use something else. Yeah, there's a July 200. Could it get back up to here? The earnings gap? Sure, it could. I mean, it's pretty oversold. Maybe a double bottom is forming there, but I personally would not put a lot of money on that. Maybe if we see a secondary order, not a secondary, but a second order come through. But for the most part, and I can go through a couple orders, but I mean, they were very, very tiny on the call side. So it's just funny, right? I mean, there just wasn't any major buy the dip orders besides this 3M order. Maybe a little bit of FXI, tiny bit of Facebook, but a couple other charts. I started to talk about Microsoft. I think Microsoft is interesting here. They bought a ton of Microsoft puts today, I believe, some of which may have been unwinding. But bottom line is, on the chart, you've got a nice defined level. Remember, Microsoft had awesome earnings, and they gapped up here, and they've given back. They filled the gap here, but they're back into 124.60 support. I really, really like that setup because you know where to get out of it if it doesn't work. So that's one name that I'm looking at. I'm going to talk more about this name later in the week, but CME I think is also a pretty good name, even though it's got a pretty wicked candle to it. And then just other names, more. I'll have more trade ideas once we know what's going to happen with this trade war and tariffs. But you start to look at names that I mentioned yesterday, which a lot of them got hit pretty hard. I'm long Salesforce, and Salesforce, which we did, there was call activity yesterday, but it actually decreased open interest. However, I still believe that Salesforce is a good name for the long term, and to buy on the dips. So it's got a hold here. I'll be watching that name tomorrow to see if it bounces. But there was a little bit of put spot in Salesforce. And like I said, all the call activity yesterday decreased, not increased open interest yesterday. But I think just to finish my thought is that I think some of the software names, some of the names like a Home Depot that has most of their business here within the U.S., as well as internet names, if they go ahead, you have to think about this, right? You have to draw a scenario analysis out. If they are going to slap on more tariffs, and if nothing is going to happen with China coming here Thursday and Friday, nothing's going to happen. I think thinking about what you're going to do next week is pretty important to be doing right now, and having a game plan, and not just not just thinking about today, but also thinking about next week and how this is going to work. All right, so that's today's video. Of course, every video is for information purposes only. I'm not giving out any advice or recommendations, but a lot to get through. I hope it's helpful. You can always email me. I'm here to help, and I'm like I said, when I see things that are not right posted all over the place, I'm happy to kind of give you my experience, and hopefully it adds some perspective. Thanks, everybody. Have a great night. See you tomorrow.